Hi everyone, and welcome to the Buffett and Beyond Stock Selection Strategies. And remember, if you want to live on the beach like Jimmy Buffett, you've got to learn how to invest like Warren Buffett. And we will teach you how to construct your own portfolio through the use of our podcasts, our daily market letters, our weekly video stock analysis, and our proprietary computer program. Hi folks, this is your host, Dr. Joseph Belmonte, along with Debbie, and that's Debbie with a Y, and all the questions she has from our listeners out there in investment land. And before we get to our podcast today, if you want a free sample of all our materials, just go to our website, buffettandbeyond.com, and sign up for our 30-day free trial, which contains all of our information along with access to our computer program. And remember, it's free for 30 days. The good.
Stocks that should be in our portfolio.
The bad.
Stocks that should be in somebody else's portfolio.
And the ugly.
Oh, stocks that should be in nobody's portfolio.
Okay, let's get on with some stocks. You'll see exactly how this method works and how we here at Buffett and Beyond set the investing parameters so that you, all of you, can outperform most of the professional money managers out there in investment land. Debbie, what's our very first question of the day?
Well, hello, JB, and hello, everybody. Well, JB, this week we're going over the stocks that were requested by our listeners over the past week. And we happen to have 3 stocks that are similar in that they deal with moving money from here to there, which we all do.
Yeah.
And all of the questions have to do with how these stocks have done in the past and if their clean surplus ROEs are telling us to buy, hold, or sell these stocks. We've gone over 2 of these stocks in the past, but the one we haven't gone over yet is PayPal. But first, one of our listeners asked about Mastercard. We do know that Mastercard is a global leader in electronic payments and serves as a processor, franchisor, and advisor to about 25,000 institutions in support of their credit, debit, and related payment programs. What do the numbers show us, JB?
Well, let's get in here and let's look at that clean surplus ROE. And remember, folks, clean surplus ROE is a comparison return on equity, and it's totally different than the traditional accounting return on equity. And when we talk about clean surplus ROE or return on equity, think of your bank account. And right now, Mastercard has a 24% clean surplus ROE. And think of putting your money in a bank that's earning you 24% per year. And to get into our growth portfolios, we want to see stocks that have an ROE, clean surplus ROE of 20% or better, because the average stock in the S&P 500 has a clean surplus ROE of 14.5% thereabouts. And if we want to outperform the S&P 500, then we want to put stocks in our portfolio that have ROEs greater than 14.5%. And when we look at Mastercard with the 24% ROE for 2019, we say that's great. Then we look at just a couple of other numbers. One is how much of that money that it's earning is it putting back into the company in order to grow. And folks, that's about 85%. So this is a real growth company. And debt, it has almost no debt. So this company is operating on all 8 cylinders with no debt. Recent dividend of about 0.6%. And we really don't want to see a growth company with a dividend because we want to see them put all the money back into the company in order to grow. And then when we look at the returns over the past 5 years relative to the S&P 500, because if it has an ROE of 24% and the S&P average stock has an ROE of 14.5%, we would expect Mastercard to outperform the S&P 500. And with the S&P 500 up about 80% over the past 5 years, this stock is up a whopping 200 and almost 60%, 260% versus about 80% for the S&P 500. So yeah, this is a hot stock, folks. It has all the good numbers. It is definitely in our growth portfolio. Really should be in yours.
Ooh, impressive. Now, our next stock is Visa, and Visa is the world's largest retail electronic payments network, providing processing services and payment product platforms which include credit, debit, prepaid and commercial payments, which are offered under various names around the world.
And then when we look at Visa, now here's something a little bit different. We see that the clean surplus ROE is 17.7% for next year. It's up from 16.3% for this year. So what we see here, and if we look over the last 5 or 6 or 7 years, we can see this ROE has been rising. Now, what does this mean? This means that the earnings are increasing year over year. However, they are increasing at an accelerating rate. And folks, the market likes that. So even though this stock does not have an ROE of 20%, it's got an ROE of 17.7%. But with that ROE rising, we like this stock. And how much of the money is it putting back into the company that it's making? 80%. So folks, this company is another growth company, just like Mastercard. Years to pay debt. In other words, if it takes all the money that it's making and it puts it back into the company to pay the debt, it could pay the debt off in 1.8 years. For Buffett, that magic number is 5, so we are way below that. And the recent dividend is about 0.7%, which means the company is putting most of the money it's making back into the company in order to grow. So even though this company is below 20% on the ROE, it has a rising ROE, and of course it is on the coattails of Mastercard. And when we look at how that stock has performed over the past 5 years, with the market up 80%, this stock is up, folks, you guessed it, 240%, just like Mastercard. Yeah, and this stock is knocking it out of the park.
Ooh, swing batter. Well, JB, our last stock is PayPal Holdings. And this company, which we've all heard of, operates a technology platform that enables digital and mobile payments by consumers and merchants throughout the world. And just for our listeners' information, this company had been a subsidiary of eBay since 2002, and in July of 2015, eBay spun off PayPal, where shareholders received on PayPal share for every eBay share held. And PayPal began regular trading on the NASDAQ under the ticker PYPL on July 20th of 2015.
Okay, when we look at PayPal Holdings, we see something very, very similar to Visa in that with the average stock in the S&P 500 at about 14.5% relative to their ROE, we see PayPal with an ROE for next year, 2019, of 14.5%. So we would immediately look at this and say, hey, it's an average stock. But then when we look back over the past 4 years, we see that this stock started at a 9.8% clean surplus ROE and now is up to 14.5%. Folks, this is an increase of 50% over the past 4 years going into the 5th year. So this is another stock with an ROE that's not 20%. However, it has a rising ROE, which again means that the earnings are going up, but they are going up at an accelerating rate, and the market just loves that. And how much money is it putting back into the company in order to grow? All of it. It's not paying any dividend. That means it's putting all the money back into the company in order to grow. And when you see that ROE going up, that means all the money it's putting back into the company is making a greater profit. Now, understand this. This is such an important concept. But with that ROE going up, that means that the company is getting a greater return on the money it is putting into the company now than the money it put into the company 4 and 5 years ago. So the profit margin is going up on everything they do. Debt, no debt.
Ooh, sweet.
And no dividend. So we love this company. And folks, when we look at how much it has returned over the past, we can't go back 5 years. It hasn't been out publicly for 5 years. So when we look at the past 3 years, we see it's up over 160%, with the market up not even 50%. So it is tripling the more than almost quadrupling the market over the past 3 years. And so when we look at these three cards side by side, we see Mastercard with a clean surplus ROE of 24%, Visa with an ROE of 17.7%, PayPal with an ROE of 14.5%. Visa and PayPal have increasing ROEs, which means their earnings are growing at an accelerating rate. So with these three stocks, folks, all outperforming the S&P 500. And over the past 1 year, Mastercard is leading the group with 60%, PayPal next with 50%, Visa next with 42%, all outperforming the market, which is returning about 18%. So these stocks are more than doubling, and in the case of Mastercard, tripling the S&P over the past year. And let's look over the past 3.5 years, and surprisingly, PayPal is leading this group. PayPal with 165%, Mastercard with 155%, Visa with 110%, all with the market gaining just 50%. Now, the market gaining 50% is very nice, folks, but when you have stocks that are double, tripling, and quadrupling the S&P 500, and their earnings are increasing at an increasing rate, you've got to be in those stocks. So this is not the good and the bad and the ugly. This is the good and the better and the even better stocks that we are talking about here, folks. Okay, so folks, we are knocking it out of the park.
Ooh, swing batter. Well, JB, I think we've just about covered all the questions sent in by our listeners out there in investment land. And remember, folks, we're here to answer your questions not only about individual stocks, but also about the stock market in general. So keep the questions coming, and who knows, we may even answer a question or two you didn't even know you had. Well, that's about it, JB, for today.
Okay, folks, and don't forget that if you want to receive all these podcasts, if you want to receive all our Saturday stock analysis of all the stocks that we have in our portfolio, don't forget to sign up for our free newsletter along with all the stocks in our 2018 portfolios. Just go to our website at buffettandbeyond.com. It's all one word. Buffett is spelled with 2 F's and 2 T's. That's BuffettandBeyond, BuffettandBeyond.com. Okay, folks, we had a great day today.
And tomorrow will be even better.
We'll see you next time, folks.
Bye, everyone.